Welcome to Charts Today. My name's David Linton, and today's edition for Friday, the 18th of March, comes to you from London. And I always sort of start the day by just saying to myself, what's changed? What are the big changes that have occurred in the charts since I was looking at it yesterday? And of course, I'm watching it throughout the day. But on the whole, I mean, this is my monthly long-term report, and these are all the instruments that are covered. On the whole, not a lot has changed. Currencies picture's still very similar. Government bonds, certainly. We've had interest rate rises in the US and the UK. That's driving bond yields higher. Stock markets have had a relief rally this week, but the trends are still down and the downside targets are there. Tech still looks bad, having activated targets. And energy has pulled back. So when I come to do this report for clients for the month ahead next week, I might start to look at some of these and turn neutral. But on the whole, not a lot has changed. And that's how I start my day. So if we look at markets, generally, we might see changes in the shorter term charts, but the medium and long term charts really don't change very much. The dollar is still strong. It will have these setbacks. This is the weekly, daily, and 60-minute chart. But these are just temporary setbacks within the trend, and it's always worth remembering that. So the euro is weak. We will see these counter trend moves. We've seen that this week, but on the whole, the euro is weak with downside targets, and we would not be surprised to see, having made this transition, the euro falling lower and almost certainly below parity based on the targets and the fact that we're below the clouds. The Japanese yen, the dollar is reaching all-time highs. That's a big surge. That's a little bit of a lead indicator for the dollar, and we're seeing there that push higher in the dollar to record highs. That's really quite key. And sterling sitting much the same, just starting to fall through the cloud as that stronger dollar takes hold. Looking at euro sterling, we have pulled back here as well. We were as high as 121, 122, making 6 years highs, the highest level since Brexit. But again, yesterday we saw that fall back in the sterling rate. Really, there was a little bit of would we go up 0.5%, and the market reacted to the downside for sterling. So sterling actually fell once the interest rate announcement was raised. So that's quite unusual, but it was almost expected. And that's often the way markets move. Bitcoin sitting at $40,000. No big changes here, just finding long-term cloud support. And the S&P 500 index did continue its rise this week. It is back into short-term bullish territory, but the reality is the downside targets are activated. Interestingly, we've just removed a downside target here, so that is a little bit encouraging, but we're a long way from making new highs, and we have rolled over below the cloud, so we are in more bearish mode. And of course, the futures today are lower. The VIX volatility is back in the high 20s. The key thing here is the trend is up. This trend is really vital. And then if we look at the FTSE future, very little change this morning. And in Germany, the DAX is down 0.75%. It's got to get back above this 15,000 level. Until it does that, nothing really has changed. And that's the key point about this, is what's changed. Looking at the CAC Quarante, we're lower as well. Japan was actually up, weaker yen helping company profits there, probably just seeing a little bit of an improvement, but still below the cloud on the medium term chart. And the Hang Seng has had a very dramatic week, sharply recovering, having hit its downside target. Sharp recovery, but of course if we make new lows, that's very, very bad, because that has given us a new downside target, some 50% lower. Hong Kong stock market halving, very hard to imagine, but the target is there, especially if we go lower, we activate it. And the same is true in Chinese stocks. We saw this big candle is recovering. We said this big move here. This is the weekly candle, recovering most of its poise. But the reality is these shocks are to the downside, and we still have further to fall based on the targets. Looking at the Sensex in India, we're up nearly 2% here. The Indian economy has certainly got higher yields, higher interest rates and yields, and is likely to be hit by a lot of the inflationary pressures we're seeing around the globe. The one market that hasn't activated its downside target is Australia, the one Western market anyway, and that's really quite key. We'll look at Brent crude in a minute and the energy mix, but looking at softs, we're off a bit this morning. Sugar's down, wheat is down 1.4%. The key thing here is we put the low in on wheat. Will we make a new low, or will we trade in this new range? And that's very much what's happening to a lot of commodities. And if we look at corn, we're down 0.5%. Gold sitting at 1931. We bounced on 1900 as the low point. That is the new sort of support level, and the targets are there. The gold price is still bullish on the medium and long-term charts, and we're coming back into bullishness on the short term. So again, little change there. Looking at 10-year yields in the US, sitting steady at around 2.5%, 2.15%. 219 is the target, and so we're seeing here again nothing changed. And of course, Apple, the bellwether for tech, did activate that downside target. We've seen a recovery, but the fact is that target is hanging over us and will do for some time. Looking now at the energy mix, we've got Brent crude sitting higher. It bounced 8% yesterday. Massive move. We do have a couple of downside targets, but Brent has now put in a floor, and that level is the new trading range, and that's the level to watch. If we go lower, that would be bearish for Brent. Now, having put that low in, a lower low would be bad. But at the moment, there's no clear signs that that's going to happen, and the upside target back to $130 is there. So it'll be interesting to see that we'll go right back to these highs. That's what the targets are saying. But of course, you've got to watch the model charts here. This is my daily, my 60-minute, my daily 60-minute and 1 minute. So I'm thinking here weeks, days, hours. That's the way that this works. Looking at US nat gas, we were weaker here this morning. We went out as neutral there. Coal has had an interesting week, sitting at 166. Emissions just struggling to get through that €80 mark, so that's really quite key there for emissions, and we just really are struggling to break through that level. So that's quite key as well. And then if we look at gas prices, up very slightly in the UK and the Dutch gas market, we're just seeing here, we're just sitting, teetering on this €100 mark, and that's looking critical for gas prices. But don't be surprised to see we tick up again, and the cloud is just starting to provide some support, and we could be making a higher low, and then we start to run again. Gas prices are normally quite sedate in the summer, so we could have a long summer of just teetering along and trading in a range. German power is actually up 2.7% this morning. And if we look at the other OTC markets, European power generally rose yesterday. These are the prices from OTC Global Holdings. These are included as standard with our professional products now if you want them. And that gives you pricing on European markets and every power market in Europe, basically. So really quite powerful. And if we drill down to UK power, we see here that the front monthly contracts actually fell yesterday, but the longer term contracts are rising. Remember, we're in backwardation where the future is less expensive than now, and that's unusual because normally you pay a premium for the future. That's the backwardation of the forward pricing is there. So we are just seeing prices for the longer dated contracts just ticking up. So that's quite interesting. Anyway, that's it for today. It's Friday. Have a great weekend. Don't forget the people of Ukraine. We don't want to get sensitized to what's going on here. And until Monday, see you then. Bye for now.